All right, strap yourselves in because today we are going deep on business structures.
Ooh, sounds intense.
It is a big one. It's something everyone thinks about when they're, starting up a business or even explaining their side hustle.
Right, like what's the best way to set things up?
Exactly. And we've got some awesome textbook excerpts to help us out here.
Love a good textbook.
So we're going to break down the main ways to structure a business.
The pros and cons.
Exactly. Why you might pick one over the other. Get ready for those aha moments.
I love an aha moment.
Me too.
Yeah.
All right, so let's start with the most basic question.
Okay.
What even is a business entity?
Yeah.
Why not just do your thing, without any legal setup?
That's where a lot of people kind of get tripped up, right?
Right.
A business entity is all about separating you from your business activities.
Okay.
It's like this protective suit that you put on
Ooh, I like that analogy.
for all your business dealings.
So it's not just me and my laptop anymore.
No.
There's like a legal wall between my personal stuff and my business.
Exactly. And that's really crucial for a couple of things, like liability,
Okay.
meaning who's responsible if something goes wrong.
Oh,
And for practical stuff like taxes and contracts.
gotcha.
So it's about protecting yourself, but also setting your business up for success.
Okay, so I'm already sensing there are different types of these protective suits.
Oh, yeah.
What are the main categories?
So we can divide them into two main groups,
Okay.
unincorporated and incorporated.
Okay.
Unincorporated, and think of it like starting out with just the basic tools.
Gotcha.
Incorporated is like bringing in, the heavy machinery.
Okay, so unincorporated is like the starter kit.
Exactly.
Incorporated is when things get serious.
Level up.
Yeah. All right, so let's unpack unincorporated first.
Okay. So within unincorporated, you have the solo act. That's the sole trader.
Okay.
And then you've got the band, the partnership.
Got it. Sole trader. That sounds pretty straightforward.
Yeah.
One person running the show.
Total control.
What's the catch?
So it's the ultimate freedom. You make all the calls. The setup is super easy.
Easy setup. I like that.
In Australia, you only need to register your business name with ASIC.
ASIC.
Yeah, the Australian Securities and Investments Commission. If it's different from your own name.
Okay.
So if your name is John Smith and you're selling pottery under John Smith Pottery,
Right.
you're good to go.
So easy to start total control. This is sounding too good to be true.
Well, there's a little thing called unlimited liability.
That doesn't sound good.
It means that you and your business are legally one and the same.
Okay.
So any debts or legal issues, your business has become your personal responsibility.
So my house, my car.
Everything is on the line.
Yikes. So if my business tanks, I could lose everything.
That's the risk you take with a sole trader structure.
Okay, so maybe not the best choice for everyone.
It's a trade-off, right? You get that simplicity and control,
Right.
but it's like riding a bike with no helmet. Exhilarating, but you better be good at balancing.
So maybe not for the faint of heart. Okay, what about partnerships? Is that just two or more people sharing the burden and hopefully the profits?
That's the basic idea. Think of it like a really successful band.
Okay.
Each member brings their own, special talent. They share the workload and they share the rewards.
So you're saying find your perfect bandmate and just start jamming.
Hold on there, rock star. A partnership agreement is crucial, even a basic one.
Okay, why is that so important?
It outlines each partner's role,
Yeah.
their contributions, how you'll split the profits and the losses.
So it's kind of like a prenup for your business.
Exactly.
But to keep things amicable.
Even the best of friends can disagree when money and responsibilities are involved.
Right. Prevent those band breakups, so to speak.
Exactly. And speaking of band members, you also have the silent partner.
Ooh, the silent partner.
They're like the investors who prefer to stay behind the scenes.
Okay.
They contribute the money, but don't actively participate in the day-to-day operations.
Interesting. So they're like the silent backers of a Broadway show.
That's a good way to put it.
Okay, so we've covered the unincorporated structures.
Yeah.
Seems easier to start, but that unlimited liability thing is a serious consideration.
It's a biggie.
What about incorporated options, the ones with the, heavy machinery you mentioned?
That's where we level up. Incorporation is like building a fortress around your business.
A fortress?
A whole new set of rules and safeguards.
Okay, I'm ready to trade in my bike for a fortress.
Let's do it.
Let's explore those incorporated structures in part 2 of our deep dive. All right, that fortress image has me intrigued. What does it actually mean to incorporate a business?
Well, it's a big step. You're basically transforming your business from an extension of yourself into a separate legal entity.
Whoa, so my business is like its own person now.
Pretty much.
Yeah.
It can enter into contracts, own assets, and yet even get sued all separately from you.
Okay, so there's a clear line drawn in the sand.
Exactly. It's a whole new level of legal separation.
So why go through all that? What's the big advantage of this business fortress?
The game changer is limited liability.
Ah, yes, limited
Uh-huh.
liability. We touched on that earlier.
Right? Remember that vulnerability with sole traders and partnerships.
Yeah, all your personal stuff is at risk.
When corporation shields your personal assets.
So break it down for me. How does limited liability actually work?
Imagine you invest, say, $5,000 to buy shares in a company.
Mm-hmm.
The most you can lose is that $5,000.
Okay.
Even if the company goes bankrupt or gets hit with a massive lawsuit.
So my house, my car, my savings, they're all safe.
Exactly.
They're protected.
That limited liability thing is pretty powerful.
It is a big deal.
I'm guessing this is why we see those LTD or Pleti LTD after so many company names.
You got it. Those little letters signal that the company has limited liability.
It's like a secret code for serious business.
It's a badge of protection for the owners, who are now called shareholders.
Shareholders instead of just, the owner.
Right, it changes the whole game.
Okay, so under this incorporated umbrella, are there different types of companies?
Absolutely. You've got private companies and public companies. Think of them like different weight classes in boxing. Okay, I like where this is going. Let's start with private companies.
In Australia, private companies are also known as proprietary limited companies, or PUNI LTD companies.
PDLTD. Got it.
They're like exclusive clubs with a limited number of members, usually up to 50 shareholders.
Okay.
And their shares aren't traded publicly, so you can't just buy in on the stock market.
So it's like a tight-knit group calling the shots.
Exactly, keeping things private.
What about public companies? They sound a lot more well-public.
Now we're talking heavyweight champions. Public companies have their shares listed on a stock exchange like the ASX here in Australia.
The ASX?
Yeah, anyone can buy and sell their shares.
So it's like owning a tiny piece of a giant corporation.
You got it.
I could buy shares in like Qantas and technically be a part owner?
Exactly. Public companies has a huge impact on the economy, but they also face more scrutiny and regulations.
Right, more eyes watching.
It's a high-stakes game with more players and more rules.
So more potential for growth, but also more complexity.
Definitely. Now, before we move on to choosing the right structure,
Okay.
there are a couple of other interesting ones to touch on. Social enterprises and GBEs.
Oh, yeah, social enterprises. Those are the businesses that are like saving the world, right?
That's the idea.
Yeah.
They're driven by a social or environmental mission, but they still operate as profitable businesses.
So doing good while doing well.
Exactly.
Good.
Think of companies like Who Gives a Crap.
Yeah, I love them.
They donate 50% of their profits to build toilets in developing countries.
Amazing. What about GBEs?
GBE stands for Government Business Enterprise.
Okay.
These are businesses that are owned and operated by the government.
So the government is running a business.
Yeah, they're kind of like hybrid creatures,
Mm-hmm.
part government agency, part private company.
Interesting. What's an example?
A classic example is Australia Post.
Oh, yeah. Makes sense.
They provide those essential postal services,
Right.
but they also aim to be profitable and compete in the market.
So they have this unique role to play.
Exactly. They have to balance community needs with marketplace demands.
With all these different structures, I'm kind of overwhelmed. How do I choose the right one for me?
That's where the strategy comes in. Choosing the right structure isn't just ticking boxes. It's about aligning your business goals, your risk tolerance, your financial vision.
Okay, so there's a lot to consider.
There is.
Yeah.
Let's break it all down in the final part of our deep dive.
All right, so we've seen all these different options, the solo acts, the bands, the fortresses, even the superhero social enterprises.
It's a lot to take in.
It is. So how do I actually choose the right structure for my business?
Well, it's not about finding the perfect option. It's more about finding the best fit for your business.
Right, like a tailored suit.
Exactly.
Yeah.
You want it to be comfortable and functional.
So where do we start?
First, take a good hard look at your business goals. What are you trying to achieve?
Okay, so what's the vision?
Right? What kind of growth are you aiming for? Are you going solo or building a team?
It's like choosing between a food truck or a fancy restaurant.
I like that analogy.
They both serve food, but the scale and the ambition are totally different.
Exactly. So if you're starting small, you crave flexibility, you want to keep things simple,
Keep it lean.
a sole trader structure might be a good fit for you.
Okay, but if I'm dreaming big,
Yeah, you want to expand, you want to attract investors,
bring in the big bucks.
then incorporating as a company might be the way to go.
So size and growth are big factors.
Huge. But also think about your risk tolerance. Are you comfortable with risk, or do you prefer to play it safe?
Some people love spicy food. Some people like it mild.
Exactly. So are you okay with putting your personal assets on the line?
Right, that unlimited liability thing.
Or do you want the protection of limited liability, that safety net we talked about?
Limited liability sounds pretty tempting, but I'm guessing it's more complicated.
It does come with more paperwork, more compliance with regulations, and potentially higher setup costs.
So more moving parts.
It's like upgrading from a basic food processor to a fancy high-end blender,
Okay, more features, more power.
but also a bigger investment,
Gotcha. So it's a trade-off.
always. What about the financial side of things?
Ooh, yes, money matters.
Different structures have different tax implications.
Okay, so taxes are on the menu.
Definitely. Sole traders and partnerships are taxed at the individual level,
Okay.
while companies have their own separate tax rate.
Interesting.
And here's a little secret. You might actually pay less tax overall with the company structure,
What?
thanks to that lower company tax rate. It's worth talking to an accountant to see what makes the most financial sense for you.
That's a good tip. It's not always about the upfront costs, but the long-term savings.
Exactly. Like
Mm.
choosing between a cheap ingredient that ends up costing you more in the long run
Right.
versus a higher quality ingredient that saves you money in the end.
So it's about finding that sweet spot.
Exactly. The right balance for your business. What level of control do you need? How much risk can you handle? What are your financial goals?
These are all great questions to ask.
They are. It's all part of building a successful business.
This has been so helpful. I feel like I have a much better understanding of the options now.
Good. I'm glad to hear that.
And it's reassuring to know that I can always change my structure later on as my business grows.
Absolutely. It's not a set-in-stone decision. You can adapt as you go.
So I can start as a sole trader and then incorporate later if I need to.
Yeah, a lot of entrepreneurs take that path.
Well, this has been a truly fascinating deep dive into the world of business structures.
It's a complex world.
It is, but we've broken it down into bite-sized pieces.
Hopefully it's all a little bit clearer now.
Definitely. We've explored the different options, the pros and cons, and the key factors to consider.
Remember, choosing the right structure is just the first step.
Right.
Building a successful business takes passion, hard work, and a bit of creativity.
And maybe a dash of luck.
Always. So on that note, I think we'll wrap up this episode of The Deep Dive.
Yeah, thanks for joining us on this adventure.
Thanks for having me.
And remember, listeners, keep exploring, keep learning, and keep diving deep.
We'll see you next time.